What's up, investors? It's the Russian dude, and yes, looks like we are going through a correction right now. It's only been just a couple of weeks. So today let's talk about this and how you should react to the unfolding events. And so yeah, for the last couple of weeks, both the S&P 500, especially NASDAQ, they were both steadily declining, losing anywhere between 4 and 7%. So far we are once again just in the very beginning of it. And the main reason for this were obviously the big portion of those indices of the big tech companies like Tesla, Microsoft, Amazon, Nvidia, Apple, and so on. And whenever those companies, they started to release their reports, which were below expectations with even more grim forecasts, well, they started as promised, as expected, it started to drag the entire indices with them. For example, Tesla, the one which lost the most, was 12% loss in a single day. And yes, once again, one of the main reasons for this it is because the reports were below expectations, but there was another reason. Well, you already know that right now there's a very big hype around artificial intelligence. A lot of people are investing in companies related to this industry. A lot of companies themselves, they try to implement this technology within their business models. For this reason, yes, whenever you see that, well, apparently artificial intelligence is just in the very beginning of its development, well, we might have guys overbought some particular companies. We might not see the actual results of the artificial intelligence within these companies for the next several years. Guys, probably we were a little bit too optimistic. This is pretty much the perfect description of the market participants' sentiment. Besides this, the Fear and Greed Index shows right now that we are in the fear zone, and VIX volatility also shows that we are in an increased volatility zone, which only magnified the losses. But it is not as bad as it seems. Even though big companies, the one which everyone talks about, they are falling, there are, however, some other investments which are actually going up. Specifically, I'm talking about small caps, stocks, and this Russell 2000 index, which in fact did gain 10% since the beginning of July. We were also talking about this particular problem on my channel for the last several videos, that those companies were undervalued in comparison to overvalued big tech. And well, now everything just perfectly makes sense. Besides that, on the previous week, in one single day, the S&P 500 lost 2.3%, and the interesting statistics that it was the biggest decline. It was the decline of more than 2% one time only for the last year, since February of 2023. So there was approximately 356 trading days when the index was not declining 2% or more. It is even worse for the NASDAQ index, because those magnificent 7 companies collectively in total, they lost $768 billion of market capitalization in a single trading day, which ended in a very red zone for them. And so far, at least at the moment of recording this video, NASDAQ is down 7.86% from its July peaks, and well, the correction is described as the decrease by 10% or more, so as you can see, we are pretty much right around the corner away from correction. So this loss of $700 billion in a single day is obviously a massive loss, but in these two last weeks of July, they lost once again collectively $1.7 trillion. I mean, yeah, T with T, trillion. But you know what, guys, don't worry, corrections are actually a good and healthy thing for the stock market, because we cannot just indefinitely grow every single day. It just does not make sense. In addition to that, my favorite thing about the corrections is that it opens some very good investment opportunities for stocks that maybe were on your watch list for several months or even years, but you are just never ready to buy them because according to your analysis, they might have been overvalued. Well, once again, correction opens such opportunities. This is the best way how you should treat such market downturns, whether these are corrections, recessions, stagflations, because yeah, American economy is very strong. It will take it much more than just not meeting the expectation of the market participants. In terms of artificial intelligence, it will take it much more to destroy the financial systems of the US. For this reason, yes, guys, don't panic. Don't be afraid, just keep investing. My first and the best advice for you is, if you are an investor, Once again, just keep dollar cost averaging into your portfolio, buy shares of the companies which you already have, assuming these are good investments, and just pick up some shares at the bargain prices. And if you are a trader and you cannot just sit and do nothing, you just have to do something because your main daily income is from trading day to day, well, then once again, take a look at some of undervalued companies within small cap companies within the Russell 2000 index. See, maybe you will be able to find some very good opportunities. Well, there you have it, guys. Thank you so much for watching. Please like this video, subscribe to my channel if this was interesting, informative for both. See you tomorrow.